Hey guys, this is Theta Trades, and today I'm talking about Riot Blockchain. So Riot Blockchain is kind of a really cool play right now because of the Bitcoin halving. The bottom line here is that Riot Blockchain is a Bitcoin miner, and that might mean they are in for a huge run-up. If we look at their 5-year history, you can see they went up massively when the Bitcoin prices spiked back in December of 2017. And as luck would have it, today is the day of another Bitcoin halving. So that means Riot Blockchain might be in for a huge run-up. Real quick though, I want to explain to you guys how Bitcoin miners make their money for anyone who isn't really familiar with the concept. So of course, feel free to jump ahead in the video if you kind of already got the gist of this, but this is going to be a basic overview of how blockchain works and where miners come into play. The entire Bitcoin ecosystem is populated by a bunch of miners, and the miner we really care about is Riot Blockchain because they're the publicly traded company that we're kind of considering. Most of them aren't public, so we don't have a ton of information about them, nor can we get a piece of the pie. But here we have Riot Blockchain, and we have two people, Bob and Alice. And Bob has 3 coins that he wants to send to Alice. So he wants to forward those on to Alice, and he needs a way to do that securely. This is the motivation for cryptocurrency. And the problem with just straightforward transactions like what's shown here is that nothing is stopping Bob from saying he sent 3 coins to Alice and saying he sent the 3 coins to Kathy. He could kind of say that both occurred and then it would be between Alice and Kathy to sort it out. Bob could kind of just keep claiming he's done whatever he's done, and as long as no one knows that Bob is no good to deal with, he can do this forever. So what blockchain does is it says all these transactions have to go into a block, and these blocks are going to be verified by the miners. And that's where Riot Blockchain comes in. So what they do is they verify blocks. And so this function you see here is a cryptographic function. And basically Riot Blockchain continually guesses inputs that can create a given output. And what Bitcoin cares about is how many zeros are at the lead of a number. So here I'm working with 3-digit numbers just because it's easier. In reality, Bitcoin has much, much larger numbers, many more digits than 3, but this will give you the idea. So the bottom line here is this number has 2 leading zeros, so this block to be verified would need a number with 2 leading zeros. So it could be anything. It could be 001, 002, any number as long as it has 2 leading zeros. And this is a cryptographic function, which means it's very, very easy to compute, at least relative to how it is to inverse. It's almost impossible to say, this is the output I want. What input do I need? So what Riot Blockchain and others are forced to do is to keep just randomly trying things until they get an output that works. And the first person who does that wins the block. That makes it so Bob can then transfer his coins over to Alice. And in the meantime, Riot receives a reward. So same thing can happen the other direction. Alice says she only wants to send 2 coins to Bob this time. Riot Blockchain wins the block. They were the first ones to figure out what input could work to make this block valid. So they do their thing. Alice is able to send 2 coins to Bob. Riot receives some more coins as a reward, and everyone is happy. And the idea with a Bitcoin halving is, in this case, Riot successfully completed 2 blocks, and they received 2 coins for each successful completion. The halving cuts that reward in half. So if this were the scenario, Riot would then, after the halving, be receiving 1 coin for every successful block they produce. So this is very important because the way most of these companies operate, and Riot is no different, is they produce these coins over time, and then they sell the coins back to people, and in doing so, they get fiat currency, in which case they can pay things like their electricity, which is very, very high for Bitcoin miners, and their rent. So as you can imagine, getting half the reward means Bitcoin miners get into some trouble, because now, for the same amount of effort, they're getting half the reward. And since these companies are really the supplier of Bitcoins to the market, it has historically created a system where Bitcoin very quickly will rise to an all-time high after a halving. So I'm jumping to Bitcoin's chart here, but you can see here was the last halving. There's been 2 so far, one in November of 2012. This one happened in July of 2016. Within 6 months, Bitcoin had reached its all-time high. Unfortunately, I can't show you 2012 because this chart doesn't go back that far, but the price of Bitcoin went from about $300 to $600 shortly after that halving. So that means today, with the halving occurring, we could be seeing all-time highs fairly soon. And if the reward for selling Bitcoin is more than double what it is today, they're going to be sitting pretty. And then here is Riot's chart for this event. So here again, I've marked the halving. They had a humongous run up, same as Bitcoin, and then kind of came back down to earth. Now I've kind of marked this part of the graph purple because before the last quarter of 2017, they were a biopharmaceutical company and they had never been profitable at all. And then they switched to blockchain. They still haven't become profitable yet, but it did put some life into what was not a very successful company. So this brings us back to Riot, and they still have a lot to prove. Last year and the year before, they lost about $20 million. And over the lifespan of the entire company, now this does include when they were biopharmaceutical, they've lost $213 million. And that dates back all the way to 2003. If you look here, though, they're not losing nearly as much as they were, and there is some hope coming out of their reports. So in the fourth quarter of 2019, Riot overhauled their infrastructure. December of 2019 and before, they were using 8,000 ASIC machines to try and compute these hashes. And that gave them about 80 petahashes per second, which bottom line, that's a crazy amount of computations, and ASIC is just means it's made to try and hash Bitcoin, try to mine Bitcoin. And what they did is they replaced all those, and they're now using these S17s from Bitmain, and their hashing power has gone up tremendously. Right now, they're at around 240 petahashes per second. That's an enormous increase. And they've ordered more than 2,000 additional machines that should be in place by the end of the summer. That'll get their overall hashes up above 400 petahashes per second. And these results have been increasing. Like this has been a decent investment so far. You can see here, this is their April numbers, and they got 108 new Bitcoins in April. In March, they had 112. To put this in perspective, in the last quarter of 2019, they only brought in 138 Bitcoin. So they're making a lot more Bitcoin than they ever have. And it looks like because they're pulling in more Bitcoin, they are outpacing their competitors. So they're hashing more relative to the others, and that is encouraging. So I think we still have to watch, though, if they can become profitable. I would highly recommend you guys read the annual report yourself because it does have a ton of information. And if nothing else, if you want to learn about cryptocurrencies, that's really the first 2 pages. Well, actually, pages 4 and 5, but the first 2 pages of substance in their annual report. They also go on to describe other things like mining pools, which is important for them, and this will give you an entire overview of the company. The bottom line, though, is what I'm seeing with Riot Blockchain is there's a lot of good stuff going on, but it also comes at considerable risk. They've never been profitable, and they've continually had to issue new equity in order to keep themselves afloat. In the event they can't become profitable soon, this is just going to continue on and on and on until they're delisted. And they almost became delisted in March because they describe it in their annual report, but the NASDAQ requires them to be above $1, and if they fall below $1 for more than 30 consecutive days, they basically get put on notice. And if they can't become above $1 again within another 180 days, they become delisted. And that makes it really difficult to trade them. So earlier in March, they spent 18 days consecutively under $1, finally broke back up, and that was good, but again, if this trend continues, where they've slowly just been burning value, I would be concerned. So again, I did put an order in today that ended up not getting filled, even though my strike price got hit. It's still running after hours, but we'll see. I don't think it's going to get filled. My goal had been to buy 100 shares at $1.50 so I could then sell some covered calls because the premiums right now on their options are really, really high. Like here's the $2 option expiring Friday. It was crazy out of the money and yet still getting an 8-cent premium because the implied volatility is enormous right now. So if my shares don't end up getting filled and I decide I don't really want to go the covered call route, that'll kind of depend how the premiums change for tomorrow. But if that's what's happening, I think what I'm going to go ahead and do is do synthetic covered calls. So get one of these long dated calls, purchase it, and then sell those short covered calls against it. And in doing so, I basically accomplish the same effect. On that, I'm still trying to decide, but hopefully this video gave you guys some decent information. If it did, please consider subscribing. More importantly though, I hope it helped you make some money. Later this week, guys, I'm going to be back talking about my Nat trade. Nat's been all over the map, and I know a lot of you have enjoyed those videos because they've been very popular. So it looks like I'm going to be assigned though, so we're going to talk about that later in the week. With that though, this has been Theta Trades, and I'll see you next time.